What's going on, everybody? The Real Fish Hook Trader here. So I want you to see this here. So down 49%, which is about $250. That was open the position 3 days ago. It was a little high. It was on GE, General Electric, and now I closed it today at 12% up. I could have got a little higher. I ended up closing at a $50 profit. So this really explains patience. If you do not have patience when you trade and you run when you see red, you will, I guarantee you, lose money. All right, don't do that. Don't trade on emotion, because that's how I used to trade back in the day about 2 years ago, and even sometime earlier this year, just getting a little nervous, but that is, as I said in one of the posts on the Facebook page, don't trade on fear, and don't trade scared when you see the money going down. Know and have faith in your position, and have faith in what you invested in, that you will come out of it on the top, right? So I debated, because it was almost at 50%, and rule number 2, roughly on my rules, they're all kind of blended in. I guess I might drive through the neighborhood crazy here. 50%, sell out of the position, get out of the position, close the position, whatever you need to do. So I did not do that. I waited, and sure enough, I was just about to actually place an order to buy 22 more calls at 12 cents per call, which is $12. So roughly $220 something. And what I would have done is $240 something. Anyway, I would have ended up adding about $350 to that $50. Closing around $380 something profit, give or take, $20 there. Can't remember the exact math at this moment. Anyway, but I did not do that, because that would have broken another rule, which is do not put more than 40% of your collateral, or your whole portfolio rather, into one position. Because if I would have done that, that would have been about 65% of my value in that one position, leaving a lot of room for error. So the position was worth about $512, as you can see on the Facebook there. The current value in the portfolio was like $1,100 at that moment, because it got knocked down at $250 plus, and plus another position I have. Actually, I don't know what happened. I got into it at the really wrong time. Even on a strangle, and it's down. It's Ford stock, so the one I love to trade the most. So I have faith that it'll come back. And that's another reason we want to have a long expiration, because if you don't have an expiration, that is reasonable to give you time to recover from a nice fall, then you're just going to be eaten alive. And every time you open a position, and I see people do it all the time. Now, the values will increase at a much more rapid rate, but, premium wise, so like, okay, these, the price is at $9.50, we buy some $10 calls, price jumps up to $9.75. Your calls are going to jump a lot higher, because it's intending that, the implied volatility is going to make it look like that position is much more attractive, much more profitable. But in reality, if you're not scalping that or getting out of it quickly at a set percentage value, you already have, limit sales set after you purchase an order or open the order, you're going to hurt yourself, because in the event that the price just suddenly pulls back, guess what? Depending on where you got in, you're either going to get back to breaking even, or it's going to keep going down, and that's not going to be good. It's going to eat that position up, and then you have no chance of getting out of it, or your opportunity is very, very slim. A lot of times when stocks touch new highs, there was always a pullback, because somebody that bought in that morning or the day before when it was low, or, depending on how far it went, they're selling off. And especially people that buy 10,000, 20,000 shares that have just ridiculous money to trade with, up into the hundreds of thousands of dollar range, and they pop open trades. And those are real day traders. Those are real swing traders that open a position at 1050 and close it at 1055, because that 5 times 10,000 or 40,000, shares that they bought, that's what they do. Now, granted, like I said, I'm not really into trading stocks hard anymore. I do that in my 401k, and I let it ride. I'm big on some cannabis companies right now, and that's where I put my money in my 401k. I am not looking at investing stocks specifically outside of that. Market-wise, I love trading options. I have fallen in love with it, really, to be honest with you. and it's become an extremely fun hobby of mine. I love winning, and perfecting a strategy to win. It takes me back to playing baseball and football, basketball. When you find what works, that's what you use, right? So you got a lot of folks out here who teach. More than welcome to check them out, or you can check out me. I'm giving you numbers showing you what's actually happening daily, weekly, monthly, yearly. I really try to plan to have that portfolio in Robinhood. I started that at like $20 probably 7 months ago now, and I have slowly put a little money here, a little money there, 20, 50, $60 a month, and I was organically at $400 something, and organically after that I made a really nice trade. That was trading stocks, penny stocks, as a matter of fact, and it doubled my position, got up to 800 plus. And then I really started digging into the options because I had a little more collateral to get in the money and at the money positions. Because when you're trading, options, when I first started it, you're scared. Regardless of what you read or you're taught, you are scared of losing money. And what happens is you open a position that you can't really profit from unless you just get lucky. And getting lucky is not how you trade. That if you want to do that, you might as well play the lottery. Not saying play the lottery, that's not what I intended there, but that's the comparison I have to put with that. So in reality, trading, say you put $500, say you throw $500 in there and you're like, hey, I need to open some positions that are, 20% of 500. So put that in there, $100 in a position is not really going to hurt you. If you lose $100, you still have $4. If you bet half your money, $250 in one position, unless you're really, really confident that that's going to work out, and you lose that $250, not saying you lose the whole thing, because you can always close the position early. And now if you do it the same day, buy and sell, the round trip of buy and sell or sell and buy, depending on, how exactly you did it, what kind of position it was, counts as a day trade. Regardless of whether it's options, it's still the same rules. Unless you got 25 grand in your account and you're in a cash account or whichever. That is a way around it. A lot of people make specific videos. I guess I could make a video about that and kind of show and break down maybe, how exactly you can avoid the day trade rule. So what you would do, basically, quick rundown to avoid day trading, pattern day trading, PTD rule, whatever you want to call it, where you have to have 25 G's in your account, is to have a cash account. And you can trade as many times in and out as you want, but you have to have the available cash to purchase the new order, because generally it takes sometimes one business day, but that depends on the brokerage. Generally 3 business days to consolidate whatever trade that was, and then your cash available will be there again. Because if your cash shows available, and that's kind of what margin is for Robinhood, how they do the day trade protection from you. So basically I can buy and sell anything as many times I want, but if I go beyond 3 in a day, it's going to hit the pattern day trade rule. And then it's even going to give you a warning and say, hey, this will put you at risk for becoming a pattern day trader. And do you want to continue, or do you want to deactivate the pattern day trade protection? I keep that on because it's nice to have, just so I don't accidentally, because if you got a bunch of limit sales set, when you remove that protection from, using Robinhood, as an early or new trader, it's going to really affect you negatively, because then you're going to get, boom, you're going to get hit. Next thing you know, your account's locked down unless you put 25 grand in there. It's only for 80 days or 60 days or 90 days or something like that. And then they allow you to trade back again with whatever kind of money you have in there. But to avoid that, you don't really want to deal with that in the first place. So just leave it alone. Keep your trades in your mind. Don't open up trades. Like, this is why I go such far extensions on my options. It's another reason, because I don't want to get hit with that day trading, pattern rule. If I open several positions up, even, and they're 3, 4, 5 months away, I'm not concerned with, I have limit sales set on everything that I open pretty much right after I set it, because I know exactly where I want to be out of the trade at. Now, granted, if it's something that's really booming and I picked it up super low and it shoots up 400%, 500%, there's one in the back, the image on the Facebook page, The Real Fish Hook Trader, and you can see it in the back. That's for Afria, the cannabis company. They were worth like $23 or something like that, and then boom, within a week they're worth 500% more at $170, per contract. So that's just ridiculous, the amount of money that you can make in options over just trading stocks. Where in stocks are you going to find a 500% return? That doesn't happen once in a blue moon. You can find 500% returns pretty averagely, through weeks or months, depending on what stock it is and how the market's doing as a whole. Because people get scared when the market goes down, Dow or NASDAQ or, the S&P 500. When those start taking hard hits, people get scared. They start pulling out money. It really affects tech stocks like, Facebook, and Apple and Amazon even gets affected pretty hard. Google is not really affected too bad. Google's a wonderful company. I did hear a little rumor that, or read a rumor rather, that Amazon might be looking at buying out Netflix, maybe some other companies that are interested in that. So that would be pretty neat. And what I want to go back to is that avoid day trading in the sense of you have 3 possible day trades, right? So you can go in and out 3 times within 5 business days. So when you do that, you want to make sure that you only do 1 a day. Or if you're making ridiculous profits, if you need to use them all in 3 days, or 1 day or whatever, that's fine. As long as the profit you're making is worth it. Or if you opened a position, and another reason I don't trade stocks like that is because when you trade a stock like that, you don't really have much possibility to recover. If you bought, say the stock went from $3.50 to $7, that next day is going to be ugly. Unless there is some serious reason for it to continue upward, there's a high probability it's going to get sold off and you're going to be done. You're going to buy in, say you bought at $3.50 and you could have sold at $7, but you're locked down from the pattern day trading, or that'll be your 4th pattern day trade, and that's going to put you out of the game. It won't, actually, Robinhood won't even let you put the order in. It'll warn you, or it just won't go in at all. Overall, it's one of the things that I can teach you, or make it very easy for you to understand, in context. Some of these videos, I feel like I ramble a little bit. I do apologize for that. So it's a lot of information in my head. I'm trying to not jump around too many times, too many points. I got people asking me to join them, in their trading teams and stuff like that, to add a little more here and there. But I really want to concentrate on doing my own thing, because I don't sell snake oil. I never have. And for anything I've ever done before, I don't want to badmouth the company, but it was a supplement company that you can easily figure out for yourself that I used to distribute for. I still have the distribution and all that good stuff. And I can't tell somebody something works when it may or may not work. So that's why I kind of got out of the supplement game. That's why I developed my own beverage, NeuroNash. And that's why I'll continue to push that forward. And the trading money that I make is really contributing to that. That's my long-term goal, is to have NeuroNash up and running as a company and being very efficient to at least, at minimum, in some local grocery stores statewide. And that's where I want to go with that. So trading is really helping me get that going. So anyway, yeah. So what I'm going to do is I'm going to offer up a one-on-one trading with somebody. I'll do this twice. I will do one as a giveaway. You have to be serious about trading. You have to have already opened up a Robinhood account. If you didn't use my link, I'm not going to hold that against you. I've posted it all over my YouTube and Facebook and all that good stuff. So I'll put the link under this video. So what I'll do is I'll do a giveaway for that once the page gets to 100 likes. And that'll be a one-on-one for a week, maybe a little more than that. Not like 8 hours a day or nothing like that. I work full time. I don't have time for that. Sorry. But I can definitely make some time to get down and sit down with you. I want you to be serious about this. I don't want you to be trying to, don't waste my time, because my time is precious. If I'm not helping somebody else, I'm with my family. If I'm not at work, I'm with my family. I don't like doing all that nonsense. Don't waste my time, please. I won't waste yours. I can teach you a lot. I wrote 2 books on this already. Both of them are on Amazon. I'll put those links in the bottom of this description as well. So I want to help you. Why do I talk about Robinhood? You just let me go and say this. So you have a lot of people out there that trade on big brokerages like Fidelity or TD Ameritrade or whatever. I have both of those, by the way. I also have Ally Investing. I've tried Swell Investing. I kind of like what they do as far as resources and healthy earth and all that good stuff, and that's great. I don't like Acorns. To me, it was kind of a waste of time, and the money's always there for you to take back if you want it. So it's not really, that's a control thing more or less. But some people will say that people that use Robinhood are not real traders. I don't know how exactly that even works as a true statement in general. But Robinhood's got a lot going for it, and they're already coming out with a banking account, a checking account, or cash account, whatever you want to call it. They're going to get that perfected out, and then I imagine that they'll start putting funds toward their charting. Once they start making their charting a little better, where you can throw some indicators in there, like I said in another video, the relative strength index is huge. I love looking at undersold and oversold because that kind of helps you gauge the value, along with their worth as a company, once you start looking at what they're doing. So GE right now is coming out huge. They got a lot of good plans going. They're also tied heavily into the government. So that can't really ever go bad for the most part, unless the government collapses or something like that, or the Fed shuts down or raises rates to the roof or whatever they do. But anyway, Robinhood is a real trade account. You can trade options, cryptocurrency. You can trade stocks of pretty much any of them that you want. Now, little OTC market stocks like super pink sheet, super dirt cheap stocks, anything under 10 cents, you're not really going to find much on Robinhood. So if that's what you're looking into, it's probably not best for you, but I also wouldn't recommend trading stuff like that all the time, because unless you're trading heavy numbers and large amounts of cash, it's not going to make a big difference for you. If you're able to scalp it, say you put $2,000 in, you bought it at 5 cents, it hits 10 cents, you sold it, you just made a nice chunk of change, and you can easily walk out of that and walk into another trade. Just don't lose the money. Do it again, repeat, rinse and repeat. Go ahead and make your money again and again and again and again and build up an account or put long-term investments in place. But that is, again, why I trade options, because I can take $20 or $40 and turn it into $60 or $100 much faster than I can trading a stock that, okay, if this goes up this much, it'll make me this much money. But that's not how I want to trade, and I've tried that. I've bought stocks and sold stocks and bought stocks and sold stocks. And if you're getting charged brokerage fees, which is another reason I love Robinhood, because there are none. There are no transaction fees. There are no trade fees. There's no contract fees for trading options like in every single other brokerage. Eventually, I think they're all going to catch up. Webull, I've had it, tried it, used it, sorry. Didn't really like it as much as Robinhood. The user-friendly factor wasn't really there. They have different times before and after market, so that was neat. But overall, I didn't really like their user ability as much as Robinhood. Robinhood is on point, in my opinion. It's one of the best things I've used in a long time. The cryptocurrency is, trading on there is not bad. I prefer Binance Exchange or something like that. If you're just buying and selling crypto, then Coinbase is probably where you want to be. For the ones that they offer. But as you can see, a lot of information. I don't want to ramble, already about to reach 20 minutes. So if you're interested, I'll do one giveaway for a one-on-one. The cost for that is going to be nothing, but you do need to have at least $100-$200 in the Robinhood account. Like I said, I'm not gonna hold it against you if you don't use my Robinhood link to sign up. I prefer that. You get a free stock, I get a free stock. Most of the ones I get are like $4 to $5 each. Some people say they've gotten the, Amazon and stuff like that, or Apple or whatever, but hey, that's awesome. That's free money right there. And it's literally free money, up to $500. So, you can only use it for so long. But then I'm going to allow, one person I'll do that same thing with. You have to be serious about trading. Like I said, please don't waste my time. Don't want to waste your time. I'm saying for about 2 weeks of the time, that we can put this together. We can schedule out an allotted amount of time to where we can meet somewhere on the daily, or every other day, whatever schedule works best for you. Again, I have a family, of course, and a lot of people do too. So we can work around however we need to do it. The total time worth will be about 2 weeks, whether it's an hour a day or 30 minutes a day, we'll get it figured out. even just messaging back and forth through emails and things like that. I can handle that too. So the cost for that, one lucky person, $150 one time. And you'll also get in that 150. I'll actually give you one of my books, and I will also have you linked up to the Fish Hook Trader at Outlook.com email list, and I'll make sure I get you sent out newsletters, emails and things like that for trade ideas on a lot of that great stuff. Tips on options and option trading in general. But if you go through me with that about 2-week time frame, you'll learn a lot. So I want you to be ready, be prepared. Don't hold back. Don't try to come at me cheap. I'm not giving you financial advice. I'm simply teaching you, how to really get into trading. This is not for your people that are, probably above my head in trade level skills, been trading for 30 years, 25 years, some crazy stuff like that. Because chances are they already know what I'm going to teach. So for you guys, you're more than welcome to sign up. That's great. But what I don't want to happen is for, those folks to try to belittle what I'm doing to try to help people, because you folks are charging $10,000, $20,000 for people to try to learn something when they could use that $10,000, $20,000 to invest. So it's really backwards of what you're preaching, that you're teaching essentially. And I don't like snake oil, and I disagree with that. I've put my money out there, and I regret it heavily, because I could have taken that same amount of money and turned it into triple in the following week, but I used that for a class. So, and that being said, that is why I only charge what I charge. It's very low. I'm straight to the point. And if you need me to explain something in simple terms, I can break it down as much as possible. I'm not gonna be one of those teachers that's like, nope, this is it, learn it. If you can't understand this, you're an idiot. I would never do that. So I want to teach my kids. My kids will be doing this by the time they're 10 years old. Obviously, they can't trade until they're 18, but we'll work around all that. I can always save them money, and that's exactly what I'm doing. So if you want to take control of your financial future, if you want to help understand what you're doing with your finances, you're obviously brokerages, they have plenty of people who run funds, but you get charged fund fees. Nothing wrong with that. Alpha returns is what you want to do, like what I do, versus beta returns, which is generally just you put money into the market, and the long haul, that beta return is what you're getting returned annually and then grossly for the entire time that you've had it in there. So when you think about that in context, the average return is 2 to 7%. Now, Warren Buffett's return was 36.7 or 37.6%, something around there. And he's now worth, $50 billion. It was $80 billion, and then the market took a crap on him. So it's somewhere in the 50 to 80 billion range. That is an extremely large amount of money. So as he would say, you continually to invest in something long-term, as long as you believe in the company, that they have something good. Amazon, Berkshire Hathaway. I see Berkshire Hathaway signs all over the place, building houses everywhere. Developments all over the place. So with that being said, we're going to cut this out and enjoy. Email the Fish Hook Trader at Outlook.com if you've got any questions. You're more than welcome to email on the Facebook page, but I think I get it a lot faster on the email because I don't have the Messenger on Facebook, so I always have phone problems when I download that. So have a good one, guys.